Hi, a very good afternoon to all of you. I must say I'm honestly very pleasant surprised to see so many of you here today, despite that it was raining. Yeah, and this morning we heard from John and also from Hassan. I think both of them give you a very good update on the REIT and also office. So for myself, I guess I'm more fortunate because I'm third speaker. I don't have to tell you all those details. I will plunge straight into sharing with you the SPH REIT properties. Of course, you can read it in the annual report, which you can get it from the booth, and also from the website. You don't carry it if you just go to our website. There's soft copy in there. All right, now, before I start the presentation proper, I'd like to thank a share investor, as well as REITs, the organizer of this event, for inviting us to have this opportunity to present to you SPH REIT. Now, I can only cover the key highlights of the properties, given that we only have a half an hour time frame. But please do go to our booth after the presentation and ask us questions or any clarification you need. Yeah, and the annual report, there are a lot more information for you to see before you make your decisions as to whether you're to invest in SPH REIT or other REITs. Okay. Now, SPH REIT is relatively young. It makes its debut in 24th July 2013. So it's only probably about just coming to 2 years. Yeah. Now, the REIT, most of you, because I would believe most of you are Singaporeans, you would see and be familiar with the two properties that is under management by the REIT. Now, what do we offer to you? We offer to you a very unique combination of prime retail properties. And this is in Orchard Road, which is the Paragon, and you see it in the slide there. And a very stable and resilient performance of a mid-market suburban mall in the west, the Clementi Mall. I would share more information with you with these two properties. Now, this, again, don't you take notes because these are all available in the annual report, also the website. Yeah. SPH REIT is one of the largest REIT listed in the Singapore Stock Exchange that is focused on Singapore retail property. As of now, we do not hold any asset outside Singapore, so you're looking at a pure retail player in Singapore. SPH REIT brings you this combination. Now, Paragon is a premier upscale mall. It has a medical tower, which some of you may not be familiar with. It is located in the heart of Orchard Road, Paragon. The Clementi Mall is a suburban mid-market mall. That's the picture on the lower end, the lowest part of the slide. Yeah. It is located in a residential area in the center of Clementi Town. It actually only opened in 2011. It was acquired from HDB as part of the integrated mixed-use development, and we injected to the REIT in 2013 when we did IPO. Now, this table below, we thought we'd just summarize for you all the key highlights of this property. Now, all these values are in Singapore dollars. The combined valuation of SPH REIT is about 3.16 billion, with a total net lettable area of 900,000, close to 1 million square feet. There are 442 tenancies, and this portfolio offers a well-diversified spread of trade and tenancy mix. I'm not showing the table of the trade mix on that distribution. Please look at the annual report, and you'll see it there. Now, both malls are well sought after, which is evidenced by 100% committed occupancy. I think we can claim that we're the only mall that's achieved 100% occupancy since, for Paragon, more than 10 years, from Clementi Mall on the day it opens its door in May 2011. The annualized NPI yield for 2014, now our year end is not your 31st December or your 30th June. Please take note, it's 31st August. So I refer to the year end as 31st August. Our yield for last year was 4.9% NPI. I will share the distribution yield with you a little bit later. Now, many of you may be familiar with Singapore Press Holdings. SPH is the sponsor for SPH REIT. Now, SPH is Southeast Asia leading media organization. And SPH, since its acquisition of this maiden retail property or Paragon in 1996, has exhibited a track record of asset acquisitions as well as asset enhancement initiatives. Now, for those of you who have seen the Promenade way back in early 1990s, and a Paragon, which is a whitish building, you see it on the extreme right-hand corner, my right, probably your left. Yeah. The Paragon you see today is an amalgamated building of the Promenade and the Paragon, and it created now an integrated, much more sizable mall that have a huge presence along Orchard Road. Now, in terms of other acquisition, I said earlier, SPH acquired the Clementi Mall in 2010, and in the more recent years, the Seletar Mall. I will talk a bit about Seletar Mall later. But SPH REIT currently comprises two properties, the Paragon and the Clementi Mall. The Seletar Mall is a first right of refusal. It's not in the REIT yet. Now, you will see from these four pictures, SPH has played a very important role to transform Paragon and the Promenade into what it is today, a very modern, very contemporary building with all-glass facade. It now commands a 136-meter fronting prime Orchard Road, and it also features 5 duplex stores. Now, in addition to the retail podium, we have 2 medical towers, and they were added on in 2003 and 2003 and 2008. Yeah. We actually did that because we had additional gross floor area, and we also decided to do medical because of our close proximity to Mount Elizabeth Hospital. And you know medical is a key component to tourism, medical tourism, as well as for Singaporeans. The next slide, I don't have to delve too much into it because I'm sure you all know where Paragon is. But from the map, you can see we command a very strategic location along Orchard Road. It faces a Takashimaya and a very busy junction. Yeah. And the medical tower, which I mentioned earlier, that we added on, it synergizes well with the Mount Elizabeth Medical Center and Mount Elizabeth Hospital. And this is just a side road away at the back of Mount Elizabeth Leng. Now, who are our catchment? Who does Paragon caters to? We benefit from a very diverse catchment. And because the island is not huge, and we have 2 MRT stations just flanking each side of us, Somerset and Orchard, and we are just off CTE, we are very easily accessible from around the entire country. Yeah. It is located in the heart of Singapore's most famous shopping and tourist precinct. We may not know this, but you know, Orchard Road is ranked the most beautiful avenue in a French presence survey. Yeah. And this was against Champs-Élysées, New York 5th Avenue. Yeah. So we have a beautiful street in our city, something we can be proud of. Now, because of its immediate proximity to Mount E, both the medical center and the hospital, the Paragon Tower is much sought after for medical practitioners to set up their clinic, because the adjacency to the hospital is quite an important factor when the doctors decide where to set up their practices, because from time to time they will need the facilities, and the patient also will need to go to the hospital. Yeah. So being close by is a big advantage to them. Yeah. And medical commands a premium to office rents. Yeah. We have a good cluster. We have 163,000 square feet that's allocated to medical tower, medical practices out of 223,000 square feet. It's about 80%. Okay. Now, the clinic sitting on top of the mall is an added convenience to the patients and their accompanying relatives. Now, why is that important? Huh? Not that office is bad, especially Hua San just came back. I think office has is a great asset, But because of our proximity to Mount E, we find that we can add more value to the property by focusing on medical. Because medical also brings patients, and we attract a lot of the regional tourists, medical tourism. And when you come, you don't come alone, you come with your family. And we're very strong following from Indonesians. And it's not so far away. And the medical facilities and standards in around the region is also not as forward as Singapore. So you find that the people in the region do come here for their checkup, do come here for more serious surgery. And then when they come with the entire family. Good for the hospitality, because you could stay in the hotels. Good for our mall, because as the patient goes through the test, the family actually do need to eat and drink. Yeah, so they do come to our mall. So we see a good relationship between the two. Yeah. Now, in the next slide, this is done by Urbis, which is an independent market company. This was prepared for our IPO in 2013. So you find it's not updated to 2012 only, yeah, because we did for IPO. I thought this graph very aptly showed to you the resilience of Paragon. Okay. The red line is Orchard Road Prime Rental Index. It's pretty flat, $30, you know, some on 35, some on 36, 37. And you see different reports, some is 40, because different agencies have different basket, all right? But suffice to say, this is quite flat. But you look at Paragon, he has continued, the index has continued to grow. That's because the asset manager continue to add value and keep ourselves relevant. We're never at a standstill, because you're only as good as what you produce today. Tomorrow is another experience. So we always ensure we're always in the forefront. Now, a little bit of information here. In 2003 is the SARS. It's a very difficult time for Singaporeans. Yeah. So we took that as the first reference point, because that was really bad for about good 8 months. Sales were really bad. Yeah. But even then, we maintain 100% occupancy. I think this goes back to what the earlier two speakers said about resilience for REITs. Our leases are typically 3 years, 4 years, some exceptional 5 years. So while there may be an epidemic, there may be an economic crisis that hits Singapore, you find that we are quite stable because our leases are for 3 years. Expiring every year typically is 30% because it's a 3-year lease. Okay. And during that period in 08 and 09, you see we box it up there, that was the global financial crisis. Now for Paragon, it was a double whammy. Aside from the crisis, I hope there's no government body here, but I'm going to say anyway. Yeah. They introduced 1.2 million square feet of retail space in Orchard Road alone. And that is on a base of 6 million, about 6 million square feet. So you see a sudden influx in for 10 years. There don't have many big properties coming out. But in that 2 years, you see Ion, Orchard Central, Merlin Gallery refurbished, yeah, Heron, yeah, 313. Yeah. So in that short period of 12 months, I would say, although I say 08, 09, actually within a 12 months period, Paragon is in the midst of these huge influx of retail space. And of course, you know, retailers go for the cheapest rent, best location. But you see from the chart, we continue to command a premium for our product, all right? Despite huge opening of space, 1.2 million, we still maintain 100% occupancy. Yeah, I think this don't come by chance. I will give credit to the management team because we're always interacting with retailers, knowing for what they're doing. So it's not a static function. So I think my earlier two speakers has explained a very holistic picture of the REIT. I now want to deal a bit about why it's important to have a good asset manager. Yeah, because if you don't do anything, your property will just slide. I think Hua San has mentioned earlier how they swap properties. I think this is how property managers and asset manager continue to add value to the assets that you invest in if you do decide to invest in the REITs. Okay. Yeah. Okay. Clementi Mall, again, I think this is an easier crowd to address because you're all mini local. When I had to talk to overseas investors, I could spend more time here because they don't go into the west or the east. Now, so I wouldn't talk too much here about the location because I think you're familiar with it, it's Clementi. But what is very key to this asset, it is an integrated asset it's integrated with transportation and bus stop, very important. But more important, Singaporeans, the MRT. Okay, now it's also the first mixed-use development in Singapore that also has a library and public housing on top of it. Okay, so it's a very well integrated development, and because of that, Clementi Mall from day one registered 27 million footfall. Okay, now 27 million is just a number in your head. Yeah, I'm going to quote this from Vivo City. Yeah, my numbers may not be exactly correct, so if Vivo is here, please forgive me. Yeah, I recall their numbers is about 53 million, 53, 54 million square feet on 1 million square feet. Now, Vivo City is very successful already, you can see, based on the crowd, based on the traffic. So you translate that, we're only 192,000 square feet, about 20% the size of Vivo City, and the traffic is only 50% less than them. Yeah, it's a huge catchment. Okay, there's a lot of opportunities for us there. Yeah, but I will qualify, not all visitors are shoppers. So that's where we need to know what the shopper wants. All right, we need to fine tune it, and I'll share you later how we are doing it. Yeah, don't assume, don't take our shoppers for granted. Yeah, they do have options. Gems and Westgate has opened further afield, although it's an 8-minute ride by MRT. We never take our shoppers for granted. The way we manage all property, shopper first. Because when the shopper comes in and they know what they want, your retailers will come in and they will do well. When they do well, they pay you your rents. Yeah. So we focus very holistically, not just rent the space and leave them alone. Okay. Now, Clementi Mall has a huge catchment, as I said, 260,000 residents and 60,000 students, because a lot of tertiary institutions around the area. Yeah. Students, while we like them, I think they're good. Their spending power is not that high. Yeah. So but they are good to fill up space, especially during the lull period, during your tea break. That's why it's important to put a holistic mix together. And the tenants are happy because of food and drinks they do come in. Okay. Now, since its opening in 2011, the Clementi Mall established itself as a very popular destination for the residents in its catchment. Now, the next slide. A lot of words there, but I'll just summarize for you. Again, these are not these are available in the annual report and also in the website. Now, SPH REITs organic growth. Organic growth means how do you develop and grow with the asset that you have. Inorganic is acquisition. In terms of organic growth, I hope I've shown to you in the last 10 minutes or so how we proactively manage the asset to grow it in a meaningful way, sustainable. Now, the other asset that many people are very keen on, and they've always asked me, so I will just mention up front now, the Seletar Mall. The Seletar Mall just opened last year in November, and it has official opening just 2 days ago, I think. Okay. It opened also with 100% occupancy. I think this shows the confidence retailers have in the SPH management. Yeah. It is not easy because it's a light rail, it's not MRT. Okay. But when are we going to inject it? Too early days, yeah, because the REIT philosophy and the REIT approach is stable, regular distribution. So we need the mall to stabilize, see how they trade, see how the shoppers embrace it. Then when it's the right time, and this is owned by SPH as well as UE, it's a JV, when they decide to divest, at that point, we will then go into a lot more due diligence, totally independent, okay? A quick slide on a current AEI that we're doing. This is Asset Enhancement Initiative, short for AEI. This is how we continue to add value. Even your property is matured like Paragon, 20 years, there are always ways you can do it. What happened is that we look at the chillers. It's about 20 years old, 17 years old, time to change really. Then we look what is available in the market. Now chillers, no need to put under shelter. You can put it outdoor. Because outdoor, it's not GFA. So we then changed the chiller with outdoor chillers and freeing us 5,000 square feet of Orchard Road space. It's very valuable. Okay. Now, this AEI will be completed by the first quarter of next financial year. Although we're 1 year ahead, we're fully tenanted for those space already. They're all fully taken up. It will generate about close to $1 million of additional revenue. Okay. So we could take a very passive approach, just replace chiller with chiller, or see what else you can do. So we continue to look for not just tenants, but also our asset. How do you use better use of the space? The next slide. This is just some new names. We embarked on this particular change in mix in Paragon. Now, I talk about Paragon because Paragon is 80% of the portfolio. And Clementi Suburban, you need to drive sales. That is the key thing. Your mix, drive sales, know your shoppers. Paragon, because it's a very positioned mall, you find that you need very intensive work to make sure you're always relevant and you don't fall behind. Okay. These are some new names we brought in, not just randomly. We are creating a men's cluster at the rear end of level 1. Because you would know the estate, upfront Orchard Road, you pay the highest rent. As you go further back, it becomes cheaper and cheaper. But we don't do that, you see. We do clustering to enhance the value. So we're doing this men's cluster at the rear end of Paragon. And by establishing that, we can command higher rentals and more marketability. It's about clustering, bringing the right traffic, and then the tenants will come also. But if for those of you who visit Paragon on a regular basis, or even not so regular, you hardly see work being done, even though we're continuing, always upgrading, because we're very mindful of shoppers like all of you and our tenants. The way we manage our construction works, actually you hardly see it. Yeah. So we go in a lot of detail micromanaging to ensure our shoppers are happy. Okay. I talked about the Seletar Mall just now already. This is just a picture of what it is. In terms of size, it's very similar to the Clementi Mall. Still early days, as I said, but we've got good tenants. We had the first theatre in the area, Shaw. It's an 8-hall theatre, first in the Sengkang area, and based on the Facebook feedback. Nowadays, social media is amazing. Whether you like or don't like to hear it, they will tell you. But fortunately, we hear good things. Yeah. The Shaw Theatre is something that I really look forward to, and because that place don't have HDB, unlike HDB shops, unlike the Clementi Mall, that void was very much felt by the residents. So they welcome the Seletar Mall. Okay. The next one is the distribution, something I guess most of you would want to look at as an investor. Since we IPO in 2013, we actually achieved a 25% returns. That is both capital appreciation, the price 18.3%. We listed at 90 cents. Yesterday, I think we closed at 1.08. Yeah, this is a lower number. I think 1.0. What they put there, keep flicking. I can't see. Anyway, I think it's 1.065. Okay, so the attrition would have probably gone up a bit more already. And also the dividends, we distributed 5.99 cents for the first financial period. Okay. Yep. Okay. I now moved on to slide 14. Can you have the right slide there? Because I'm not too sure the right thing. The next one, maybe. Okay. Yeah. This will show the performance of the first half of the current financial year. So that was historical to 31st August, what I just showed you just now. Now I update you current to the first half, which is 28 February, just 2-3 months ago. Yeah. For the 6 months to February, we have an NPI of 4.3% higher than the same period last year. All right? And this growth is due to 2 positive contributions, both top-line growth, which is gross revenue, as well as lower operating expenses. So we'll continue to grow the top line as well as to manage the expenses. So it's not the expense of it. Okay. Rental reversions. Yeah. Suffice to say that we renew way ahead of time. 1 year usually, 1 year, 9 months, depending on the kind of leases. All leases, all 44 leases for the first half that's expired are all renewed ahead of time already. And we achieve a positive reversion of 11%. Now, Clementi Mall, you see a negative. That's where I share a bit. Now, Clementi Mall opened very well, and you have tenants that comes and offers rents that you couldn't refuse. Yeah. But whether it's sustainable. So we do look at tenant sustainability. In order to pay your rents, to pay your dividends, they must pay us rents, right? Yeah. So they're very bullish. We do have retailers that are very bullish. They comes in, they give you a rent, say, how can I say no? But I look at something that's not sustainable. Yeah. So instead of having bad debts, we take the opportunity to change it and write it and bring in a better mix. Bring a better tenant, you see the adjacency value will also go up. So when you market those other areas, you find the demand with there because the footfall is there. Okay, and it's only a very small percentage. So when the opportunity arises, we would do that. Now the next slide again. Earlier I showed you how the Paragon has done. Now I look at how SPH REIT has done. I think you can see from the slide we are the blue one, 9.1%. This versus the STI as well as FTSE ST index. Yeah, we outperform both the index. Okay. Now the next slide. Okay. Important question to all investors: how's our borrowing? Our gearing is the lowest in all the REIT. We're 26%. Yeah, we're the lowest geared asset REIT, and because of that, we have headroom of 400 million should the opportunity arise. Yeah, we're ready to acquire when the opportunity presents itself. Okay. And we fixed more than 55%. Although it's only a new REIT, we already fixed 55% of our debt. And we will definitely monitor it very closely because interest rate is also a key component, a risk element, which John has mentioned earlier. Yeah, so it's one thing that we look at very carefully. This would be my final slide. It sort of go through what I've just shared with you. We have a significant asset size of 3.16 billion. I must say I do agree with myself. The asset very well positioned, yeah, very well managed. Yeah, we are a good suburban mall in the MRT, right? Not so big, so you don't have to worry too much about having vacancies. Manage it well. Good support by shoppers. Yeah, 39 million. Paragon very established. You've seen the track record. Yeah, and we continue to upgrade ourselves all the time. Never be complacent. Yeah, we have a unit exposure not just to retail but also to medical. Medical comprises 20% of the whole Paragon Mall. Yeah, so that is another strong contributor to our portfolio. And of course, when SPH REIT is launched 2 years ago, it's a platform for us to grow our asset. Yeah. And again, through the half an hour presentation, I hope I've also demonstrated to you the experienced management team and the committed team that is in this SPH REIT. They will continue to grow the assets. Yeah. I think with that, I just did my 30 minutes, I think. Yeah. Thank you very much for your time, and I will end by saying that this is only a key highlight of our asset. There's so much more for us to share with you. Yeah. So our booth is outside. Our IR is there. With 2 managers there, and I'll be there also shortly. Please do come and talk to us so we can share a bit more with you. I also pointed to you the relevant pages. Because the IPO is, I think, 200 over pages. An annual report is so many pages. So today my attempt is to put it in a nutshell for you to appreciate what we have. Thank you so much.